There are now 2,781 billionaires in the world, and they own a total of $14.2 trillion worth of wealth. The rich keep getting richer, while the rest of the world is barely keeping up with the expenses on their basic needs. Some of the smartest people out there claim that it's an income problem. They think minimum wage should increase and governments should start offering universal basic income. But I don't agree. I think the problem is entirely different. Almost everyone has experienced their cost of living increase significantly over the last 5 years, but wages definitely haven't kept up. So, if your cost of living is going to rise forever and your wages don't keep up, how are the top 1% just continuously accumulating more wealth? I think the not so secret that the rich have figured out is that the US dollar is fake money, and saving a lot of dollars is one of the worst decisions you can make financially. Instead of saving dollars, the rich get rid of their dollars as soon as possible by buying things that can potentially increase in price over time. These things are called assets. Instead of working for an hourly wage, the rich buy things like homes and stocks that increase in value over time, and they focus on getting cash flow to avoid having to sell their assets. While the rich get richer, the people at the bottom just keep getting poorer and can't even afford to maintain a basic standard of living. This is happening because the majority of the world saves in a form of money that's not meant to be saved. I've studied this topic for over 100 hours, and I need you to understand how making the wrong decision here can impact you forever. The fact that the US dollar is fake money has forced people to use things like houses as savings accounts. They buy as many homes as they can, and they use them to store value for the future while renting them out at higher and higher prices each year to pay for their cost of living. The current financial system calls this passive income, but I like to call it extortion. Some people own thousands of rental properties, and this, in my opinion, is one of the main reasons why younger generations can't afford to buy a home to live in. These people hoard something that's required as a basic human necessity, and then they rent it out to the people who need it and charge them as much as they possibly can. Keep in mind that I'm not saying that landlords, the people who own these homes, are bad people. They own thousands of properties because the financial system is designed to work this way. And again, this is only happening because the US dollar is fake money. We've been convinced that the US dollar is valuable, so most people around the world are willing to exchange their time and resources for it. In this video, we'll be going through topics like how the US dollar is produced, why investing is a way to accumulate money with the wealthiest, and why institutional investors will eventually sell all the rental properties they own. It doesn't matter how hard you work, you're probably going to be broke in 30 years if you don't take a risk with your savings. Risking your savings means that you have to buy something with it that can increase in value over time, like stocks or real estate. But most people around the world don't have access to either of these things, so they just save in whatever currency they earn. The US dollar is the world reserve currency, meaning that trade around the world is finalized in US dollars, so a lot of people use it to save. Almost everyone trusts that the US dollar will be worth something in the future, and if you ever need to buy a commodity like gold or oil, you'll very likely pay for it in US dollars. The US dollar is considered a safe haven because it's backed by trust in the most powerful country in the world. Other countries with much more volatile economies can see their currency lose 30 to 50% of its value in a year, and it'll never recover. So the people in these countries choose to save in dollars instead because compared to their own currency, the dollar holds its value relatively well. The US economy is pretty stable, so almost every other currency loses value when compared to US dollars. But there's an issue with the dollar. It can be printed at will. While the dollar is pretty stable compared to other currencies, it still loses value year over year because more of it is always being produced. Dollars can be created faster than things can be made, so the cost of living keeps going up. Tax revenues are supposed to be the US government's main source of income, but the US government is constantly spending more than it earns. This is called a deficit. You can see from this chart that the US government is almost always spending a lot more than it earns. At the beginning of this year, the US government projected a $1.5 trillion deficit for 2024, meaning that it already knew before the year even started that it'll spend more than it earns. To pay for this excessive spending, the US government has to borrow money. Bonds are just an agreement where one entity borrows money from another. The borrower has to pay the lender interest based on their agreement. The lender owns the agreement and is paid back at a specific date in the future. If somebody buys US Treasuries, They're basically just buying the US government's debt, and they're paid back at some point later on. The US government sells its debt in public auctions. Treasury bills have the shortest maturity, up to a year. Treasury notes are in the middle of the pack with maturities between 2 and 10 years, and Treasury bonds have 20 to 30-year maturities. The US Treasury makes an agreement with buyers of the debt to pay back their principal amount, which is the amount they paid for the debt, plus a little bit of interest on top. The principal amount is paid on the maturity date. As long as these treasuries are bought by someone, the US government can spend as much money as it wants. In the past, when most investors had 60-40 splits between stocks and bonds in their portfolio, the US government had no trouble selling its debt. Investors would just add the debt to their portfolio, and they were happy because they would get some interest. But more recently, the US government has had some trouble finding buyers for its debt because investors don't actively buy as much debt as they used to. It's much easier to access stocks and real estate, and you can see this from yields on 30-year US Treasury bonds. As fewer investors want to buy government debt, the interest paid on this debt goes up because demand is down. But the US government will need to keep borrowing, so it keeps selling more and more treasuries. Governments are supposed to borrow money to invest in their country, but instead, the US government borrows money for other purposes, like defense, making social security payments to retired individuals, or paying the interest on its own debt. The issue with this is that the interest on the US government's debt is adding up really quickly. Right now, the US government pays about $1 trillion per year in interest alone. This interest is paid by selling more bonds and borrowing even more money. It's getting more and more difficult to sell these bonds to investors because most people aren't sticking to the 60-40 split between stocks and bonds. They're adding other investments like real estate to their portfolios, or they're just holding a lot more stocks because the returns are a lot higher. Currently, the US government is in almost $35 trillion of debt. This number is increasing by about $1 trillion every 100 days. There are two parties that own the US national debt. Either they're intergovernmental or public. Intragovernmental parties include US government agencies and the Federal Reserve, which is the US central bank. Public parties can be individual investors, institutions, and even foreign governments. For example, China and Japan's governments own something like $2 trillion of the US national debt. Here, you can see the split of government debt held by the public versus government agencies. Like I said before, the Federal Reserve is the US central bank. It has certain functions, some of which include setting interest rates or the cost to borrow money, lending to the US government, and issuing US dollars. The Federal Reserve can print as many US dollars as it wants to. When the US government can't sell its bonds to the public, it has an agreement with the Federal Reserve that mandates the Federal Reserve to buy them. If the US government sells treasuries and the Federal Reserve buys them, the Federal Reserve can just print more money and add it to the US government spending account. In the past, money was taken out of circulation when bonds were purchased by investors because they were giving their savings to the US government and they weren't spending the money themselves. Only the government was spending, so there was only a single transaction. Today, people are buying houses with that money instead of giving it to the US government to spend. So we're seeing double the impact from the same amount of borrowing because the Fed just prints more money to fund the US government's spending. The Federal Reserve doesn't buy US national debt directly from the US government. It buys the debt on the open market, meaning it has to pay whatever the market price is to ensure that rates that are paid by the US government on its national debt don't go up too much. This is a simple supply and demand solution where if too many people are selling, but there are not enough buyers, the yield on the national debt will increase. The Federal Reserve works to make sure that interest rates don't go up too much. At the same time, it adjusts interest rates whenever it deems necessary. For example, when inflation gets too high, the Federal Reserve increases the benchmark Fed funds rate. This is the rate at which commercial banks lend to each other overnight. This is the lowest rate at which you can borrow US dollars from a bank. One of the biggest issues with this is that as the US government spends more money, more US dollars have to enter the economy to keep rates low. If interest rates get too high, global capital markets could collapse because borrowing would slow down significantly. When more money enters the economy, prices rise because there's more money chasing the same amount of goods and services. You can print money, but you can't print anything else. This means anyone who owns dollars loses some of their wealth because the money they save is being diluted. I like to think of this almost like a stock split. When a company has a stock split, it splits its shares into smaller units that are proportionally worth the same as they were before. For example, you may have a pre-split stock worth $100, and after a 20-to-1 split, every share is replaced with 20 shares that are worth $5 each. Each share from before is split into 20 shares, and the 20 shares are cumulatively worth the same amount as one share before the split. Amazon had a 20-to-1 split in 2022, and Nvidia is going to have a 10-to-1 split in the coming months. But let's compare this to how the US dollar works. What if there's a 20-to-1 split and you only receive 19 shares? This is what 5% inflation would be equivalent to. Let's say that extra share goes to the company that's issuing the shares, so investors lose 5% of their wealth because they have to pay the issuer the equivalent of a tax. When the US government borrows more money and the Federal Reserve prints it to give it to the US government, it's essentially doing a stock split, and it's giving all the newly split stocks to the government, and most people have no idea this is happening. Let me explain that again. When the US government borrows money and spends it, it's diluting the value of every previously issued dollar in existence. So let's say there's $100 in existence and the US government borrows $1. That would mean that the money supply, which is the total amount of money in the economy, increases by $1. So it goes from $100 to $101. If you held $1 before the new money was issued, you owned 1% of the total money supply. After the new dollar is issued, you own 0.99% of the money supply. It doesn't seem like a big difference, but over time it accumulates. And when there's more than 1% of the total money supply issued, it accumulates even faster. So let's say $5 are issued instead of $1. You now own $1 out of $105, meaning you own 0.95% of the total money supply. Printing money doesn't lead to more goods being available. Every dollar that's printed is competing against every other dollar that's already in existence. Your $1 would have lost 5 cents of value because the total supply of money increased, but the amount of goods didn't. More money is chasing the same number of goods. Demand rises, but supply stays the same. Whoever gets that new money is the one getting the benefit from your 5% loss. Now let's think of this on a more realistic scale. You don't just lose a couple of pennies. If you saved $1,000 last year, you lose $50. If you saved $10,000, you lost $500. Some people have their entire life savings in their bank accounts in US dollars. When I used to work in banking, I'd see people with hundreds of thousands of dollars in their bank accounts, and it was meant to be their retirement savings. These people were losing $25,000 to $50,000 every single year, and they were adding about the same amount back to their bank account, so all of their savings were being eaten up because of money printing. All of their hard work was being spent by their government. This can only happen because the entire world uses US dollars as a savings vehicle. This is called inflation. The price of goods reportedly increased by about 3.4% since April 2023. The real numbers are probably a lot worse than this, and we're seeing this at the grocery store and the gas station. It's to the Federal Reserve's benefit to report inflation lower than it actually is, because if it's higher, then it means the Federal Reserve has to increase rates more, meaning the entire system could collapse. As rates go up and inflation rises, fewer and fewer people want to save in dollars. The Federal Reserve has a monopoly on producing US dollars, meaning it benefits from keeping inflation artificially low. If inflation gets too high, people will find other ways to save, and US dollars will decrease in value even faster. Anyone who's considered financially literate is buying things like real estate and stocks to avoid having their wealth stolen from them by the US government spending, because houses and stocks can't be produced as easily as dollars. But both of these are leading to other problems in the US economy. When savers start hoarding things like real estate, prices rise. Again, this is just basic supply and demand. Demand can keep rising, but supply can't keep up, because more and more people are buying second, third, and even fourth properties to rent to someone else. The US dollar can be borrowed into existence by regular everyday people who take on loans at banks. So for example, if you took on a mortgage, that money is newly produced. If you own a home and you get a second mortgage using the equity in that home, you're increasing the demand for houses by creating a debt agreement with your bank. The wealthy do this because they know houses are harder to create than dollars. Older generations are holding the majority of real estate because when they were buying 30 or 40 years ago, houses were much cheaper. Baby boomers hold something like $19 trillion of homes, which is more than double what's held by millennials. But because the value of their houses have increased, they're able to buy even more with the equity in their home. Today, houses are much more expensive than they ever were historically. because so many people buy multiple houses. As the value of their primary residence rises, they borrow against the house and buy another house and take on another mortgage. In 1971, a house cost $25,000 while the average income was around $10,000, meaning a house cost 2.5 times the average income in the US. Today, the numbers are completely different. A house costs something like 7 to 10 times the average income in the US. This is because people bought more houses than they need over the last few years, and there's no limit to the amount of money that can be printed and added to the circulating supply. Whoever owns the homes can borrow more money and can keep buying more houses, and they can use the income that they generate to pay for all of their expenses, and they don't even have to work. Some people have bought thousands of houses and raised the cost of living for everyone. Most people from younger generations can't even afford a single home because prices have risen so much and their wages just haven't kept up. Houses are supposed to be a way to become financially stable and build a family. When fewer people in newer generations can afford houses, the country can't grow because people can't afford to build a family and have children. This increases the gap in wealth between older and younger generations because everyone is more isolated and newer generations are spending all of their money on basic necessities, so they can't save. There's also stocks, which are, in my opinion, another reason for why there's a wealth gap. Companies try to do whatever they can to ensure that shareholders are happy and they don't care about their employees. For example, Walmart and McDonald's shareholders are some of the wealthiest people in the world, but their workers are some of the poorest. Both companies employ the most SNAP benefit users out of all the companies in the US. Younger generations are the ones who are working at these companies as part-time jobs when they're at school. They're stuck working these jobs longer and longer because they can't afford the basic cost of living with their income, so they're not able to save and get out of working at these companies. While the shareholders get wealthier, the people who are actually doing the work and producing something get poorer over time. If these employees can't save, how will they be able to get out of poverty? On top of this, their cost of living is constantly going up, so they're spending more and more of their time working and trying to make ends meet, so they can't start businesses or save for the future. While they pay for their own basic cost of living, they're also paying for someone else's because they're paying rent, and landlords need to make a profit so they can earn passive income and not work. SNAP benefits are government-funded food stamps. The US government funds these food stamps by using deficit spending. If you really think about it, shareholder profits are funded by taxpayers and by savers who hold on to dollars. Money is an idea that humans came up with to represent value and improve commerce. If we didn't have money, we wouldn't be able to easily price goods and services, and we would have to resort to barter, which is the direct exchange of goods and services. For example, if money didn't exist, if I have something you want, instead of paying me for it, you'd have to offer me a favor in the future or a good or service today. But how do I trust that you'll pay me back in the future? Money is a way to represent value. If you can't offer me a good or service, you could give me money. Money is supposed to serve certain functions, and when it doesn't, all of society stops working the way it's supposed to. The most important economic principle is scarcity. If demand for a good or service exceeds supply, it will become more expensive over time. If supply exceeds demand, it'll become cheaper. This applies to everything from raw materials to labor. Changes in prices are signals. Prices are used to incentivize an investment into producing certain goods and services. This is how the economy is supposed to operate. Because the US government has an unlimited line of credit, it can completely disregard scarcity. It can just borrow more money, leading to more inflation, the loss of purchasing power, and the need for the financial services industry, which is existing because of inflation. The financial industry takes so much of our resources. Think about how many people are working in the financial services industry. As the US government borrows more money, the financial services industry gets bigger, and it takes resources away from things like healthcare, agricultural production, and trades. The financial services industry is specifically designed to help you battle inflation, and if the US dollar couldn't be printed at will, we wouldn't need the financial services industry in the first place. As time goes on, the financial services industry becomes a bigger part of the economy. During lockdowns, we saw people getting paid thousands of dollars to sit at home, not producing anything. When governments can borrow money to fund certain projects, like lockdowns, they prevent the economy from working the way it's supposed to. When businesses were forced to shut down and people were forced to stay at home, companies like Amazon took a huge share of the pie when it comes to e-commerce related businesses. Governments have the power to take resources away from more important projects like building houses or growing food that keeps us healthy, and move those resources to less important projects like sitting at home or working in the banking system to produce more money. They do things just because they think they're choosing the right path of action, but nobody knows everything. For example, they may bail out a bank and keep it running to keep the system from collapsing, but every time they do this, they eliminate the competition and stop the banking industry from being disrupted and improving. It's just a band-aid solution. Governments don't have to deal with scarcity because they can borrow money created out of thin air and skew production and consumption however they want to. For the economy to operate efficiently, we need to use a form of money that serves three purposes. The first one is a unit of account, the second one is a medium of exchange, and the third one is a store of value. A unit of account is used to measure value, a medium of exchange is used to transfer value, and a store of value is supposed to retain your purchasing power over the long term. If any of these functions aren't served by the form of money being used, price signals become distorted and markets become inefficient. The US dollar does a great job measuring value in the short term because inflation is hardly noticeable with short time horizons. But over the long term, the US dollar is a terrible unit of account because inflation and interest rates are unpredictable, but they determine the future value of dollars. The US dollar works well as a medium of exchange, but only if you have a bank account. Transferring value to buy things in developed countries is easy, but this leaves out about 75% of the world. If you don't have a bank account, every transaction you do has to be in person because physical currencies are used. Over the long term, US dollars do a terrible job as a store of value because they're constantly being printed and demand just can't keep up with supply, so the value is constantly dropping. Everybody is forced to find a different way to save because the dollar simply doesn't work as a store of value. You can see from what I said that US dollars don't work as a store of value, a medium of exchange for most people, and a unit of account over the long term. Because of this, market participants have to use houses and stocks as money. In the past, gold worked really well. We used gold as a store of value for thousands of years, and gold coins allowed you to transact and store your wealth. An ounce of gold has always been worth enough to buy a men's suit. Gold also has no counterparty risk, which is the probability that another person in a transaction may not fulfill their end of the deal. This exists with the US dollar financial system because you can easily default on a loan. If you own physical gold, you don't need to rely on anyone else to be involved in your transactions because the gold is the value. The issues with gold are that it's not portable or divisible enough. You can't pay for coffee if you have an ounce of gold because the value of the coffee is too small. To make gold work as money, we relied on middlemen to hold our gold for us, like banks and other financial institutions, and they provided paper currencies that were equivalent to a certain amount of gold. Paper currencies are much easier to move around than physical gold. The dollar was one of these paper currencies. In 1971, Richard Nixon severed the link between the dollar and gold, and anybody who held dollars could no longer exchange their paper money for gold. This is still the case to this day, and the dollar is backed by nothing but trust. Bitcoin can solve this problem. Bitcoin is a form of money that anyone can save in and anyone can produce more of. With dollars, there's no input of energy required to produce more. All that the Federal Reserve has to do is press a button and more of it is issued. On the other hand, to produce Bitcoin, you have to use energy and you have to invest in equipment, which is designed to create more Bitcoin through a process called mining. A really big difference between these two systems is that the Federal Reserve keeps all of its activity private. Nobody in the public gets to see what the Federal Reserve does. The Federal Reserve has never been audited, and we have no idea that the numbers it reports are accurate. And politicians work as hard as they can to make sure that the Fed never gets audited, and nobody can confirm that its books are accurate. On the other hand, production of Bitcoin is publicly available information that anyone can verify at any point in time. All you have to do is run Bitcoin Core, which is software that goes through every single transaction that's ever happened, and it ensures that no manipulation occurs and no fake coins are created. Or they can use a site like Mempool, which is a blockchain explorer that shows you every transaction that's ever happened on the Bitcoin network. Bitcoin is produced every 8 to 12 minutes, and anyone in the world can verify the production of every single coin in existence. In order to manipulate Bitcoin, you would need to convince every single person in the world who owns Bitcoin to agree to a fake transaction if you were to create one. Since anyone in the world can audit the Bitcoin blockchain, it's impossible to manipulate the Bitcoin network, since at any time you can have thousands of eyes on the network, and there are almost 100,000 computers around the world auditing the network every 10 minutes. Over time, this number just goes up as more people run Bitcoin Core on their nodes and become interested in Bitcoin. With Bitcoin, if the US government wanted to manipulate the network and increase the money supply, it would have to convince all of the people who own Bitcoin to dilute their ownership in the network And I think at this point, this is next to impossible. The supply of Bitcoin is predetermined to be 21 million Bitcoin, and each one of these Bitcoin can be split into 100 million units called Satoshis. Increasing the supply of 21 million would require that everyone who runs Bitcoin Core voluntarily consents to their ownership being diluted by running a new version of Bitcoin Core with a higher number of total coins, meaning their money is being stolen from them, and the chances of them doing this voluntarily is next to zero. The supply of Bitcoin can never change because if it does, it means that the network isn't doing its job anymore, and the value of the network would likely drop to zero because Bitcoin holders will sell their holdings and supply will outpace demand. Why would anyone want to own a version of Bitcoin with an unlimited supply? It just means we're going back to the dollar. There's potentially unlimited demand for Bitcoin because the majority of the people in the world don't own some, and even when they do, they want more. This means the value of the existing Bitcoin will always go up because there will never be more than 21 million. The biggest problem we have today is that we can't save because we use fake money. Not being able to save leads to almost every other problem we experience today. For example, poverty and an increase in homelessness. The people impacted the most are the ones living paycheck to paycheck because they have no savings. And usually these people are part of younger generations and they've only been in the workforce for a short period of time. Since newer generations can't afford houses and most don't understand stocks, they're stuck saving in dollars and losing significant amounts of their wealth each year because their cost of living will continue to rise forever. If Bitcoin were to replace the US dollar as the world reserve asset, it would mean that everyone would be saving in something that can't be diluted instead of dollars, so their wealth will no longer be taken from them. They don't need to take that extra step of being educated on how the stock market or how the real estate market works. When you also consider that almost everyone in the entire world doesn't have access to stocks and prime real estate in the first place, you can see how Bitcoin can be very beneficial. For example, someone from Nigeria would either save in dollars or naira before 2009 when Bitcoin was created. The naira is regularly losing 20 to 30% of its value every single year. The Nigerian government has outlawed the ownership of US dollars, so black markets exist to buy US dollars, and the black market price of dollars is double the official rate. The people who own dollars are still losing 5 to 10% of their purchasing power every year because the US dollar is still inflating away, but they're in a much better position compared to just holding onto the naira. Now that Bitcoin exists, Nigerians can bypass the US dollar, meaning demand for US dollars is decreasing and demand for Bitcoin is increasing. Since Bitcoin has an unlimited supply and it can't be manipulated, people from all around the world will see the benefits of saving in it. As Bitcoin's price rises, more people are interested in owning it. I've had conversations with multiple real estate investors who no longer buy real estate because Bitcoin is a much better asset for long-term savings. You can avoid interest, there's no maintenance and repairs, there's no need for an inspector, dealing with tenants, no need to collect rent, no realtors or lawyers, no property taxes, and you get self-sovereignty. Real estate is just a commodity, and just like every other commodity, the price is determined based on supply and demand. As real estate investors realize that Bitcoin is a much better savings tool, they're going to sell their homes to buy Bitcoin. A lot of retail investors have an emotional attachment with real estate investing, but large institutions simply don't care. Large institutions will sell everything they own to buy the most profitable asset in the world, whatever that is. In the last 15 years, that's been Bitcoin. Large institutions own millions of single-family homes in the US, and housing prices have dropped 99.99% when priced in Bitcoin. When will these institutions start selling these properties on the market, and what will happen to the price of housing when they do? It'll very likely drop, and this will be a net benefit to society. More people will be able to buy homes, more people will be able to build their families, and when individuals are able to save, they'll be able to take risks like building their own businesses rather than working at companies that pay them pennies for every dollar of profits they produce. This will motivate more people to work harder, and more prosperity will follow. The US dollar is fake money, and it leads to tons of other problems because nobody can save and build for their future because their wealth is being constantly diluted by the US government so it can spend excessively. Bitcoin solves this by giving people an option to save in something that can't be stolen from them. The supply of US dollars can increase forever, but the supply of Bitcoin is limited to 21 million and nobody can change this. I think it's only a matter of time until most of the world is relying on Bitcoin for their everyday savings. When this happens, Bitcoin is not going to be as cheap as it is today. It could easily and very quickly rise in price from 10 to 100 times. Make sure you check out this video right here to learn the best strategy to accumulate Bitcoin for 99% of people.